Bitcoin world record attempt? Experts debate Bitcoin's purpose while others reveal how global money flow impacts crypto prices. Plus, a potential $11,000 Bitcoin dip before a surge and a look at Bitcoin on Wall Street. Want to know what's next? Watch to find out. In the latest video from Altcoin Daily, hosts discuss the Bitcoin world record attempt happening in Las Vegas at the Venetian. They're trying to get the most Bitcoin transactions into the Guinness Book of World Records. Over 3,390 transactions have already happened, with a goal of 4,000. One host, Aaron, shares his unpopular opinion that he doesn't want to spend his Bitcoin, preferring to hold. He sees this record attempt as a message to the world about alternatives to traditional finance. Another host counters, suggesting supporting Bitcoin merchants is important. This Bitcoin world record attempt is interesting. While it's cool to see Bitcoin used for everyday purchases, the idea of a world record for transactions feels a bit like a publicity stunt. The conflicting opinions on spending versus holding Bitcoin highlight the ongoing debate about its true purpose. Is it a currency or a store of value? Recent news suggests increasing institutional interest in Bitcoin, which leans more towards the store of value narrative. It's a complex situation with different viewpoints on the best way to utilize this technology. In the latest video from Crypto Rover, Bitcoin's price hovers around $16,000, resembling a previous golden cross pattern that preceded a rally. A potential drop to $11,000 is anticipated before a significant upward movement. A $5 billion stablecoin distribution from FTX is expected to boost the crypto market. Altcoins, particularly Ethereum, are highlighted, with Crypto Rover showcasing a personal trading strategy using grid bots, accumulating on dips and selling on rises, anticipating a substantial altcoin surge. Ethereum, currently consolidating within an ascending triangle, experienced positive ETF flows while Bitcoin saw negative flows. A price target of $4,000 is set for Ethereum, after which profits will be secured. The video concludes by reiterating the potential for Bitcoin to dip to $11,000 and emphasizes the importance of altcoins in the current market. The overall sentiment, despite the mention of a potential dip, leans bullish. The predicted $4,000 Ethereum target is ambitious, but not outside the realm of possibility considering past market behavior. The anticipated stablecoin injection from FTX will definitely be a factor to watch, as it could inject much-needed liquidity into the market. It's worth noting that market predictions, especially in the crypto space, are highly speculative and the actual price action could deviate significantly. In the latest video from Lark Davis, he explains the surge of Bitcoin-related products on the U.S. stock market since Bitcoin spot ETFs launched in January 2024. He covers several types of Bitcoin investments, including spot Bitcoin ETFs, leveraged Bitcoin ETFs like BitX for 2x long and SBIT for 2x short, and Bitcoin treasury companies such as MicroStrategy, Nakamoto, and Strive. He also touches on leveraged stock ETFs for these treasury companies like MSTX and MSTU for 2x long on MicroStrategy and MSTC for 2x short, income-generating ETFs like MSTY and IMST for MicroStrategy and Maxi for direct Bitcoin exposure, and Bitcoin treasury preferred stocks, STRK with an 8% dividend and conversion option, and STRF with a 10% dividend. He explains key metrics like MNAV, Bitcoin per share, and Bitcoin yield to evaluate these investments, recommending Bitcoin Magazine's article, How to Measure the Success of a Bitcoin Treasury Company, for further research. Lark Davis concludes that while these products offer investment opportunities, he personally prefers holding actual Bitcoin due to the increasing dilution of the Bitcoin Treasury stock market. He believes the growing number of these companies ultimately benefits Bitcoin itself through increased buying pressure. It's fascinating to see how Wall Street is creating so many financial instruments around Bitcoin. While some of these offer potentially lucrative short-term trading opportunities, the complexity and risks involved, like NAV decay, are substantial. This reinforces the idea that for long-term investors, directly owning Bitcoin might still be the most straightforward and secure approach. The constant influx of new products makes it challenging, even for experienced investors, to stay on top of everything, emphasizing the importance of continuous learning and research in this rapidly evolving space. In the latest video from Coin Bureau, We learn how crypto prices dance to the tune of global liquidity. It's like a swimming pool. Safe stuff like bonds at the shallow end, stocks in the middle, and risky crypto at the deep end. When the economic waters are calm, money flows to the deep end, boosting crypto. But when things get rocky, money rushes out, causing crashes. Measuring this liquidity isn't easy, but tools like the Global M2 Money Supply and the Global Liquidity Index, GLI, can help. Expert Michael Howell predicts a liquidity peak around Q3 2025, aligning with some crypto price peak predictions. Ben Cowan suggests crypto might even jump the gun, reacting to expected future liquidity. The video also explains how investor psychology and leverage make crypto extra sensitive to these liquidity shifts. Leverage boosts prices during good times, but fuels crashes during bad times. The video also looks at where this liquidity comes from: central banks, commercial banks, government spending, and even rising asset prices. On the flip side, things like bond market wobbles or trade wars can scare investors and dry up liquidity. The video wraps up by showing how you can use this info to your advantage, suggesting using on-chain metrics like Bitcoin hodl waves and the MVRV score to spot when crypto is getting too hot or too cold compared to the liquidity flowing around. This helps figure out good times to buy or sell. The connection between global liquidity and crypto prices is really interesting. Recent news about central banks possibly slowing down interest rate hikes could mean more liquidity sloshing around. If that happens, it could be a good sign for crypto, at least in the short term. But like the video said, it's not that simple. Things like regulations and what's happening within the crypto market itself can also play a big role.